Mic check. 1, 2, 1, 2. Live trading about to start right now. Let's set everything up. So the chart to my left, is ES, and the chart to my right is NQ. One moment, let me get everything situated. Let me send everybody an invitation. Gotta send everybody an invitation. All right, so like I said, live trading about to start in it's 9:10, so we got about 15 minutes. We got about 15 minutes for the market open. We got 15 minutes to the market open, so give me one moment. Sending the link to my Discord. Cause he said like the link, I ain't put the link inside the description. I thought I did. It's right here. I just want to make sure my inner circle people can see what I'm seeing. It's in the I threw the link inside of the I got it. Okay, bomb, he got it. All right, perfect. All right. So we got, like I said, 15 minutes. So let's go right to NQ. So first thing I do always, like saying before. So I don't really gotta do it because I'm gonna do it again. But right here, this zone, if you go to a higher time frame chart, this is this bullish fair value gap. So you see we're delivering from this bullish fair value gap, right? So this two candles right here is a order block. So you see how it came into this order block, respecting consequent encroachment of this higher time frame wick. You see how it stopped, then it started rallying back up. So you see we generated these highs. And today, if you go look at my chat, I put this zone in here last night. So I was expecting it to come to this green zone. So first thing, I just want to show you that. So let's go to the weekly right quick. You know, we're still bullish on the weekly, right? We still have this bullish fair value gap underneath it that it can potentially come back to, right? But right now we're still holding, right? We're still holding this bullish order block, right? And coupled with this bullish fair value gap. Remember, a high probability order block is when you have a series of down closed candles and aggressive displacement move up, leaving a fair value gap. And this is on a daily chart. So this is a higher time frame PD rate, right? So of course, all-time highs, these are a magnet because why? We have double highs right here. So let's go down to a lower time frame, maybe like a 1 hour. I literally go right down to a 15-minute, but I kind of just want to see what inefficiencies do we have on a higher time frame. Okay, we have this 1 hour bearish fair value gap that I'm expecting to use an inverse. All right, so you got that. So now let's go to our opening prices. Go to our opening prices. Opening prices first. Opening price is literally 8:30. So let's notate that right quick. 8:30 opening price is where here. So right about there, that's the 8:30 open. All right, then I look for the midnight open, which would be midnight open is right here. Bullish candles open low, close high. All right, that's the midnight open. So we're bullish on all time frames right now. Right, but we look actually bearish on the lower time frame. So we got a nice little pulled back to the inefficiency, lovely, tapping into these PD arrays, expanding up. You see how we got delivery up? It's expanding up. Right, so let's go right to the 1 minute. Okay, let's see what we got. We got buy side up here at 24,913. Right, we have more buy side up here at 975, and then we also have these all-time highs up here at 25,028. So we have a lot of buy side liquidity. Okay. So now last thing, let's go to 7 o'clock. All right. So let's go to 7 o'clock. So we got 8:30. So we got the 8:30 open here. Let's make sure 8:30 open is correct. It's a little bit lower. Bearish candles open, high, close, low. So we got 8:30. So the 8:30 open and midnight open are in the same zone. Remember, you don't want to see price action consolidate near opening prices. That's not what you want to see. If you see price action consolidate near opening prices, you have a chance of it being a maybe like a little ugly morning or just a consolidation for the morning. All right, so we got all of our opening prices. We got the 8:30 open. We got our new days opening gap. We got our inefficiencies. Now they look for 7 o'clock, and let's find this 7 o'clock low. So 7 o'clock is right here. The lowest low after 7 will be this low right here. This is the 7 o'clock low right here. Got the 7 a.m. low. So we still got what? We still got 10 minutes before the market open. 7 a.m. low, and then we got the 7 a.m. high up here. So this is the highest high between 7 and 9:30. You want to notate the highest highs and highest lows after 7 because these are also key levels, right? That can match with your bias. So what we got here, let's go right to a 5-minute one quick. So like I said, if we're bullish, right? If I'm bullish, remember, if you're bullish, you want to see it go lower first, right? So let's break this down right quick. Let's say I'm bullish. I'm bullish. I'm bullish, right? So I want to see market open, right? And actually either we consolidate for a little bit or we just open and manipulate lower. I wanted to manipulate lower because I wanted to fake out the traders, right? Because we trade smart money concepts, right? We don't do retail, we trade smart money concepts. So the best place to actually jump into is when if you're going long is when you're in a discount. So if I accumulate, manipulate lower, now I'm in a discount, right? And retail traders, they may be thinking, okay, I want to go short because breakout traders, when they sweep lows, breakout traders go for these lows and break out and to go. They want to continue to take the train lower. So they let it break out and then they'll come back and then a retest to go lower. So I'm looking to fade all the retail traders, right? That's why I started video off with this is smart money concepts. This is not regular retail trading, right? These are smart money concepts that we're using to, execute our orders. So I think we got everything. We got the opening prices. We got a 7 a.m. high, 7 a.m. low. So I'll be looking for a sweep of the low and then to come back target higher. So that's what I'm looking at right now. So now let's go look to see if it's some news. All right. Also, let me put up ES also. So the same thing I do for ES, I mean NQ, I do for ES also, right? Because these two are correlating assets, so they're supposed to be moving the same, right? So if they're not moving the same, obviously something is up. So you can use that to your advantage. So let's see. Right now, as you see right now with ES, we're literally just going back and forth, back and forth, back and forth, back and forth. So we got a little bit. If you see both charts, it's just both of them are accumulating. You see, accumulation is when you're just going back and forth, up, down, up, down, up, down, up, down. It looks like a little bit of high resistance, right? High resistance. So the difference between high resistance, let me delete this. The difference between high resistance and low resistance, you want to trade in a low resistance environment, right? You want to trade in an environment like this. All right, come up, create a low, create a high, come up, leave a fair value gap, respect the fair value gap, come back up higher, hit the breaker, come back up, maybe do like a little sweep, but like this. This is what we're looking for. This is low resistance, right? When it's not taking out the highs and lows and it's respecting fair value gaps, right? It's respecting fair value gaps to push us up higher, right? We align with order flow, right? When it's respecting these highs and lows and not sweeping out every high and low and respecting these PD arrays that gets formed, and then start disrespecting the opposite PD arrays on the way up or down. That's low resistance market. High resistance market is what we're looking at now when we create a low, high, lower low, higher high, low, high, lower low, higher high, low, high. You know what I'm saying? And we may leave, but we constantly keep coming back into the range. So obviously we're not going nowhere, right? So you don't want to trade unless you're on some sniper type of shit where you want to just use this as support and then use this zone as resistance, right? And catch your plays from low to high or from high to low. You can do that also, but that's more of a low probability trade. And over here, we try to do high probability trades all the time. All right, so let's sit back, market. So all right, so oh my god, I forgot. So we're gonna see if there's news. Quick question. If y'all can hear me, can y'all please type into the YouTube chat? Can you click just type in yes if you can hear me or no if I'm sounding a little bit bad, please, because I don't know if y'all hear me right now or not. So we got a couple people in here. If you don't mind, just write into the YouTube chat yes or no. If you don't mind, if you can't hear this, so I can make sure. All right, somebody just put a check mark. Yes, I appreciate y'all. Appreciate y'all for listening. All right, let's get it. So right now we're gonna sit tight for 8 more minutes until market open. So what I'm gonna do right now is I'm gonna go check the news. Okay, because it's Wednesday. So look like we had 8:15 news. So let's see if this 8:15 news did something. 8:30 here. 8:15 should be. So 8:15 was this big ass candle right here. So this is a news candle right here. See how volatile that is? All right, let's see. We got more news coming up. We have yellow folder at 9:30, manufacturing PMI. We got another yellow folder news at 9:45. Then we have 10 a.m. news. Oh, we have a red folder, 10 a.m. news. So red folder is what you're looking for, right? So we only have one red folder at 10 o'clock. So price. So when there's red folder news, you actually want to you don't want to trade during red folder news, right? You either want to get out of your trade before news happen, right? Or just literally wait all the way to 10 a.m. Because usually you see how we're literally just going back and forth, back. You see how we're literally just going back and forth, back and forth, back and forth, back and forth. Price may do that all the way until to 10 o'clock news because that's when it gets volatile, right? When news come out, that's when it gets volatile. So you can use that to your opportunity. Okay, so we got a whole maybe 2 yellow folders, which is at 9:30, 9:45. We're gonna monitor those news right there to see if they're gonna do anything. But I'm looking forward to the 10 a.m. news. the SMI manufacturing PMI, and then after that, that's it. That's no more news. That's no more news that we have. So let's just be patient. We got 7 minutes, so let's get it. All right, I'll be right back. So we got what? We got 6 minutes. All right, we live on YouTube, man. We live on YouTube. If you want to watch me trade live, you want to come join, you want to come learn, click the link and let's get it, man. Being in this live YouTube. Let's get it. We already been going live for the last 15 minutes. So let's get it. All right, we live on YouTube, man. We live on YouTube. Do you think trading is okay? Do you think trading is a little risky with the government shutting down going on? Or you mean like trading today? You think trading today is risky? That what you're saying? Oh yeah, that what you said. Don't you think today? Hell yeah, nigga. But price action is price action. That's why price action is price action, right? So that's why you want to actually be patient and be disciplined, right? And let the candlesticks tell you what they really want to do, right? That's the That's the whole goal. But yes, it can be a little risky. It can be a little risky, but price action should still do what it does. But yes, that is a low probability day. So remember, it's a difference between a high probability day and a low probability day. So the fact that, like you just said, the government shut down, it may be a low probability day that plays can run in your favor, right? So we may get a lot of what high resistance trading, right? Which is back and forth, back and forth, back and forth. So yes, it can be a little risky, but that's when you just rely on proper order flow and either you trade or you don't trade. But yes, it is risky trading with the government shutdown. But I don't miss no days. I don't miss no days regardless. So I'm still come here, sit here, and monitor price action because remember, I'm an observer, right? We're as traders, we're an observer, right? So we're supposed to observe price. That's all our job is. Observe price. So I'm gonna still come here and do what I gotta do. So right now you see how price is so this black line I have right here, right, is the midnight open. So look how we are using this midnight open, right, as a magnet. So we here. Look how it leaves midnight open, comes right back to the midnight open. Leaves the midnight open, it tries to come back. Leaves it again, comes back, break through it. Now you see it's like this. You see how it's constantly returning back to the midnight open? That's already a sign. That's when you see it doing that, that's already a sign that we may have a low probability day. Right. But like I said, if I'm looking for the market to go up, I want to see it go down first. So you see we're already getting what we're already getting what we was expecting. So market still have market open 9:30. So this is the 9:30 candle right here. So we swept out this low. We already got an SMT. That's crazy. We got an SMT. Do we? Oh, sorry. Yes, we got an SMT. So we already got SMT at market open when ES. So NQ took out this low right here, but as you see, ES didn't. So that's an actual SMT. You see how price is reacting literally right off of it. Mm, damn, look at that. That was nasty. Hey, that was too nasty. That was too nasty already. Damn. God damn. I ain't even get a chance to. So do everybody know what SMT is? Right. Let me show it since we. So you see how one of them made a lower low and one of them made a higher low. So the asset that made the lower low is the stronger asset. The one that made the higher low is the weaker asset. So you see, that's why you see if you have another SMT at the high. So you see how and ES never ES. Oh, it did take out the high. Oh, it just did. Okay. All right. Let's see if we get a continuation. We get a nice continuation. Displacing away. That was lovely. How much points is that? Damn, boy. So price literally did exactly what we were expecting. Went lower. And literally just went up. I think went up literally. Yo, that one candle literally went up 74 points. If you had one contract, that should have been $140. That is crazy. That's crazy. So we have a large first presented fair value gap, right? Which is this is the first fair value gap that gets presented after 9:30. So you see, we also got a breaker, right? We have a low, high. You see how perfectly it came into that breaker? Oh man, that was lovely. Low, high. It didn't even have the willingness to come back into the breaker. So let's just manage price. Price did exactly what we were expecting from the beginning. That was lovely, but it just did it so fast that we wasn't able to actually catch a play. But it's okay. So it swept out these highs. So the next target would be up here at 913. But you want to wait for it. You want to see if it comes back and retests this breakout level. You never want to just get in just because. So it's something that's called FOMO, right? So if you don't know what FOMO is literally fear of missing out. That's what FOMO is. So you see how just massively aggressive it just ran up. So that causes fear, right? That causes fear into the markets because people are like, oh, it's gonna run without me. I'm not making money. They're making money. So that's why you never want to get in on breakouts. You want to wait for it to come back and retest the zone that you're looking at, right? So I want to see if it had the willingness. I want to see if it had the willingness, right, to come back to this bullish fair value gap, which is also the first presented fair value gap. And then, like I said, I want to, if I'm on the right side of order flow, I want to see it literally respect the upper half of this P array. Right? I want to see it respect the upper half because we allow the wicks to do the damage, but the bodies is going to tell the story. I want to see the bodies close up here, right? Then expanding away. But you see how it literally came back and retested. You see how it literally retested the high, the line, like the old liquidity line. So if it comes up and create a change in the state outside of this out here, I would be expecting to leave this zone here as a breakaway, which means is that I'm not if it breaks out and close and make the change in the state, I wouldn't be expecting it to come back into this zone. Right. Because if you're bullish, if you're aligned with bullish order flow, if you're on the right side of bullish order flow, you want to see it leave breakaway gaps. Breakaway gaps is literally just a fair value gap, any inefficiency that just stays unmitigated, right? You're not expecting it to come back down, right, and use that zone. So let's see what we get. So we did get a lot of little retest of that 7 a.m. high. You see it to the T. It retested it to the T. Let's see if we can kind of create this change in the state outside of it. So if you don't know what a change in the state is, a change in the state is literally a order block because we're changing the state. So you see how we're delivering. So perfect example, you see how we're delivering down, right? We're delivering down, right? So the delivery is down. Now, as we come up, we're switching the delivery, right? We're switching the delivery from down to up. That's why it's called a change in the state of delivery because it's changing the state from bearish to bullish. Just now, right here, look what it's doing. It's changing the state. It's going bullish. Now look, it's going down. So it's switching from bullish to bearish. Then it's changing the state back up. So that's why with these changes in the state, you want to see, and you see how this is, you see how you get these two down close candles right here, and you got this aggressive displacement move up, leaving a fair value gap. That's a high probability change in the state, aka order block. The ones that leave that displacement, it displaces away. With a displacement, it's a fair value gap. Without a fair value gap, it's really a lack of displacement. So if you want to know how to look for displacements, any candle that displaces away, and if it don't leave a fair value gap, it's not a displacement candle. Now we could get an aggressive move up, right? But the best ones leave a fair value gap. So, do anybody need any help breaking anything down? If you need any help understanding anything I said, just write it into the YouTube chat, or just ask me the question into my Discord so I can answer the question. It's best for me to answer the question live right now so I can actually really show you, right? And I can literally give you the example on the chart. So if you have anything you need help with right now, anything you need help with when it comes to trading, anything that you don't understand that I just said, just comment so I can answer your question. Because remember, the whole goal is to get better with trading. That's the whole goal. Get better. So as you see here, we did not create a change in the state. So sometimes it may look, so for me, right, my changes in the state, it has to close above the wick, right? So we get this down close candle, right? So the wick that I'm looking at will be here. As you see, we never closed above any of these wicks right here, validating this change in the state. So until you see how we created new bearish candles, it starts over for me. It starts over. So the new order block will be up here. You got it, because this is, remember, the most sensitive part of the order block. Let's say it does this. Let's say it actually expands away, leaves a fair value gap, right? So the most sensitive part of the order block is going to be from the open of the first candle to the high of the order block. So that whole wick is the most sensitive part of the order block. That's why once it breaks out, you want to see it come back and retest that most sensitive part of the order block. And then that's when you're looking for to see the change in step delivery and to expand away from it. All right. So he said, when do you use your fib? When do you use your fib? I use my fib all the time. You can use your fib. So let's use it right now. We can use the fib just to find out equilibrium of this range right now, right? So let's say I want to find, remember, because the market does 4 things at all times, right? We generate the liquidity, which is we're creating the highs and lows, right? This low and this high got created. This low and this high got created. Also with this high. Now, what's the next thing to do? The market going to hunt the liquidity, right? You see how it hunted these highs and it went and swept it out. So now these lows are intact. So the market going to generate the liquidity and then hunt the liquidity. The third thing the market going to do is rebalance to an inefficiency, which is this fair value gap right here. This is the inefficiency. So this is something that the market can potentially do. The third thing. The fourth thing the market going to do is literally pull back to equilibrium of a range, right? That's how you can get your pullback, right? So if you draw, so I'm using my fib, draw from the low to the high of whatever range you're looking for. Equilibrium is literally the 50% range. So that's when I use my fib to find out if I'm in a premium or I'm in a discount. Remember, so if I'm just losing my tool, anything in the upper half of where I'm at, I'm in a premium, right? It's expensive. It's in the premium. But anything in the lower half of the fib, in the lower part of the 50% range, all of this is a discount. So I want to buy in a discount, right? I don't want to buy in the premium. Because remember, if you're buying in the premium, it's expensive. So, so that's when I use the fib. Hope I broke that down for you. And everybody use different fibs, right? People use the little 78%, 78.9% range. People use the 67. I only use the fib for the quadrants, right? Because in each square, there's 4 quadrants, right? There's a 25%, there's a 50, 75. So there's a 0, 25, 50, 75, 100. So there's the 4 quadrants. So that's all I'm looking for. I'm looking for the quadrants when I use my fib. So you see how we did not create that new change in the state of delivery. So you be patient, because honestly, we're literally buying. So let's say, so my per example, I'm gonna use my fib again, right? I'm using my fib from this high to this low that got created, right? So let's use it right quick. Use the fib from the high to the low. So you see how if I'm buying anything up here, which where I'm at right now, with prices literally up here, this is a premium. It's too expensive. So your best buys is gonna come. Your best buys is gonna come when you're buying down here, right? These is when your best buys is gonna come. So if I'm trying to go long, I want to wait for it to. That's why I was trying to go long, not trying to, but that's why when this SMT happened, this was the time for me to go long once it created change in the state. But it happened too fast because why? I'm in the discount, right? I don't want to buy in this green zone because I'm in a premium. So hopefully that made sense to you. Damn, I gotta delete this. I delete this damn zone. Delete. All right, wow. So right now, 50% of the range from that high to low that you just saw me drop high to low is literally right here at that red line. That's where 50% is. So, all right, let's zoom back in. Let's see what we got. Let's see what we got. So it looked like it retested. So it looked like it retested the 7 a.m. high again, the line. You see it? And we actually kind of swept out. We actually kind of swept out this little low right here. I want to see if ES did ES actually. So you see how I'm constantly watching both charts because it's something that's called confluences, right? Confluences are just basically reasons why. So if you're constantly looking for reasons why trades can work in your favor, you see what I'm saying? Is there's more reasons why the trade could work in your favor because the more confluences you have stacked up, the higher probability the trade is, right? The more, you see what I'm saying? So wait, I want to see if it took this low. So this low right here got taken. So you see we got an SMT. So you see how this low right here at 70 at 935. The fuck. Sorry for that. I forgot what I was saying. All right. I want to literally see if we're gonna come back into this first percent fair value gap, and if we do, how are we gonna hold? Right? Remember how I'm expecting it to come at inefficiencies, right? Any inefficiencies, any PD rate, same thing. If it's good, if it's good, and you want to know if you're on the right side, if you want to know if the trade is gonna work, you want to see it respect the upper half of zones. All right, you just want to see it do that. But yeah, I think we got it. This low. So you see this low right here, and sometimes looking at the SMTs can actually mess you up sometimes also because it can like screw your actual thought process sometimes. But that's why it's best to constantly do it. That's why you only get better at things by constantly doing it, right? So you see how that low got swept out, and then but didn't get swept out, and you see how. So same thing. This is a divergence, right? Because one asset is doing something the other one isn't. So you have one chart on the right, you have NQ taking out these lows right here, and then you have ES right here. Didn't take out these lows. So it's either, so I'm saying, so when you see that, that means it's really a low probability day. Either you're going to capitalize off of it or you literally want to wait for price action to literally do the same thing on both charts. Right. That's why I say being patient. Being patient is key. Patience is key. So let's see. Do you ever trade ES? Hell no. Not hell no, but it's just why would I trade ES when I can just trade NQ? Only like one of my mentors was like, okay, sometime he'll trade in ES when the price action is looking a little bit more better, right? So let's say if I'm looking for inverse value gap and a change in the state, and let's say on NQ we don't get that inverse value gap and a change in the state, right? But on and on ES we can get it, right? So I guess you could potentially jump into the trade on ES. So it's really the same thing because they're both literally gonna do the same thing. So But the ticks and the points is differently, right? So when you trade ES versus NQ, the points and the ticks are differently. I think on ES it's totally different. I think it's like $12.50 per tick or per point or something like that. So okay, we're into this fair value gap. So this is the first presented fair value gap after 9:30. So like I said, if you want to know if price is going to hold. So you see how it's immediately breaking through it. So you see how we slip it out. So you see how sometimes it could. So one thing about the S&Ts could do, if you don't really know where price is going to really go, if you really don't know where price is going to really go, it can fake you out. You see how it so let's say me, I take S&Ts a lot, right? Let's say my SMT is looking for SMT, right? Then you're looking for a change in the state of delivery, and then you're looking for an inverse fair value gap to get disrespected, to get used as the opposite. So it will create bullish or bearish SMTs to just mess up your mind, right? So if you don't really know, that's why the draw on liquidity is key. The draw on liquidity is key. So you see how it literally just disrespected this fair value gap. You see how it literally just remember, like I said, you want to see it. You want to see it stay in the upper half. In the upper half, it immediately went down, closed below first can. That's how you know we're not bullish right now, or we're just you still need to be more patient. And then look, we swept out this low, and then look, ES right here, this low right here is still intact. So we literally got two SMTs. So let's see how far down it goes. That's why it's so important to be patient, because when you be patient, you literally get to see and weed out all of the bad just stuff, right? So you see again, we're returning. We keep returning to these opening prices, right? You see how we left the midnight open down here. We left it, for example. So we left it, we came back to it again, left it, came back to it again, broke above it, came back to it again, broke past it. We're supposed to continue, right? We're supposed to continue to keep going higher. It literally poured right back down here again. So remember we said you want to be a buyer in the discount. So if I go from the high to the low, right now we're in a discount. We're in the discount. So this is where your good buys is want to come in. And then we just got a sweep, right? So this is where a good long could come in, right? Because most people are thinking short now because we're in the discount. So let me delete this. So now if you're thinking of going long, you want to see bullish order flow. That's what you're looking for, bullish order flow. Even if you want to go short, you're looking for bearish order flow, right? So we got the sweep. I want to see it get above. So I want to see it get above this zone and to get treated as an inverse, right? So it's gonna look like this. We sweep, we break above, disrespecting. Remember, this is a bearish fair value gap. I'm sorry, but we're underneath it. So if you're underneath it, it's bearish. If you're above it, it's bullish, right? So we're underneath the fair value gap, so it's supposed to hold as what? Some resistance, right? So I wanted to break above here, disrespecting, and you see right here, it's literally a bearish fair value gap right here. So coupled with the first presented fair value gap. So I want to see it disrespect this bearish fair value gap, close outside of it, validating it as an inverse. Then I want to see it retest it and stay here. Then you want to see it create a change in the state, and then that's how we can kind of go long, right? That will be a high probability trade. And we still got the SMT right here at the lows. We still have the same SMT, but we just created a new one. So sometimes the SMTs can create multiple SMTs. So you see how this is the first SMT here, and then these equal lows. So these is equal lows, and this is a lower low. That's the same thing as the SMT, right? Same thing as the SMT. It don't have to. It do not have to make a higher low. Equal lows is the same thing as a higher low. Well, it won't be the same thing, but just pertaining to the SMTs. So we're looking for bullish order flow, right? The first bullish order flow thing we're looking for is this bearish fair value. It's a bearish fair value gap right here underneath this zone. It's a bearish fair value gap right here. You want to see it disrespect that bearish fair value gap. And then you want to see it create bullish. You want to see it create bullish order blocks, right? Bullish changes in the state. That's what we're looking for. You never want to get in just cause. You always want to be patient. You always just want to actually be an observer, right? You don't want to anticipate. You don't want to jump in too early. You don't want to experience FOMO. That's how most traders lose their money and they give their money back. Right? You don't want to be in a stage of just constantly giving the money back. That's where I'm at. Right? Just giving the money back. Win the money, then giving it back. Win the money, giving it back. So you see how it's yet again, it's returning back. Let me delete this down. It's returning back to this opening price. You see how it's constantly returning back to the opening price. Constantly. That's a sign of low probability. So it looked like we closed outside of this first bearish value gap. You see how it's coming into it? I want to see it actually. I actually want to see it. So let me delete it. Hold on. Because I want to see it. I literally want to see it get used. Inverse fair value. So you see how it closed outside of it here? I want to see it come back in. You see how it came in? I want to see it respect this upper part. I do not want to see it come in this lower part right here. I don't want to see it do that. I don't want to see nobody, no bodies down there. I don't want to see nothing down there. That's how I know it's good. When we leave the lower half of PD rates open. You see how we came into it? I want to see it leave it. Right. Also, what I want to see a down close candle. Because I use down close candles to support parts higher when I'm bullish. So you see, I want to see it. You see how it's retesting. This is a retest. You see how it's retesting it. It's testing the zone. It's testing the zone. That's what we're looking for. Let's see if we get the displacement. And because remember, this is a bearish fair value gap right here also. And this coupled with this first presented fair value gap. So I want to literally see it just disrespected. But because of the government shut down, right? Prices literally returning back to opening prices. All of those things. We're creating SMTs at the highs and lows. So it's a lot of things that can kind of like make it a low probability day. And we got crazy news tomorrow and Friday. So I think it's we got big news on. Oh, it's Friday. So Friday is big news. So whenever we got big news on Thursday, Friday, price action can be kind of tricky in the earlier days, like Monday, Tuesday, Wednesday. So that's why a lot of traders they'll be done trading after today because they're not going to trade tomorrow or Friday because it's so much news. All right. So you see how we getting that expansion away? This is exactly what you want to see. And you see the down close candle, this down close candle, right? I want to see these down close candles support price higher. You see down close candle support price higher, down close candle support price higher. That's exactly what you want to see. So I would get into this play, right? But again, I'm not because of the probability of today, right? But price action is literally showing us that right now that I kind of want to go higher. But if you look at the grand scheme of things, we're literally just in the same range. Like if you just go look like this, we're literally in the same range. All we doing is returning back to the midnight open. So yeah, we expanded, but we were supposed to keep retest and keep going. We ended up coming back, sweeping out these lows, coming back. So when you see it doing that, sweeping out the highs, lows, sweeping out highs, lows, it's called yes, it's called high resistance market, but it's called something else also. It's called it's another term for it. I forgot the name. Seek and destroy. So question, it's 6 of y'all in here. Has anybody heard of what a seek and destroy is? So a seek and destroy is basically when it's exactly what I explained about high resistance days. Right? It's sweeping at the high, sweeping at the low, just staying in the same range, right? Returning back to opening prices. That's a seek and destroy because it's seeking to destroy your stop loss. That's just literally what the term is. It's seeking to destroy. So it's putting back to this first presenting fair value gap. We just disrespected this inverse, this bearish SIBI. We disrespect this SIBI down here also. So you want to see it actually hold, just like we explained down here. Once you get above, you don't want to see it come to the lower half. Same thing. I do not want to see it come to this lower half of this first presented fair value gap. And you see yet again, it keeps returning back to these opening prices. This 830 and these open 830 and midnight open. But anyways, a seek and destroy is literally when it's just you see how. So this is seek and destroy. So you see how we are consolidating, consolidate, consolidate. We go lower. We take out the high. We take out the high again. We take out the low. We come all the way down and take out the low. We come all the way. You know what I'm saying? It's seeking the liquidity, highs and lows, to destroy your stop. That's what a seeking destroy is. It's just seeking to destroy wherever your stop is. Then it's coupled also with it. I'm gonna keep saying it. It's constantly returning back to these opening prices. You do not want to see that. You do not want to see that. That's a sign of a high resistance, low probability market. So you see how we literally disrespecting. So let me just delete this zone now. I usually keep it, but because of price, we having too much. We having just too much levels on the chart. It's kind of starting to look a little cluttered. But you see, what are we doing? We're literally just going back and forth, back and forth, back and forth, back and forth. So the dude that said, "Don't you think trading today is a little risky with the government shutdown going on?" You were absolutely correct. But for me, I don't let outside things determine what I want to do. So my job is literally to come to the chart and let price action. I let the PA, the candlesticks, tell me if we're going to have a low resistance day or a high resistance day. And I use the other confluences like the government shut down today. The other confluences to be like, yeah, that's a valid reason why I shouldn't trade today. Price keeps on returning back to opening prices. These 830 open and this midnight open. It keep returning back to it, right? We're constantly returning, we're constantly taking out the highs and lows, which is a seek and destroy. And then the news, and then the government is shut down today. So those are multiple confluences why you really shouldn't be trading today. You should be watching. Because honestly, just because you're not pressing the button, that don't mean you're not trading. Right now, right? I'm not pressing the button right now, right? But I'm still trading. Trading don't have to be you pressing the button. Trading could be, remember, as a trader, our job is to be an observer, to watch price. Remember, all we do is manage money. We decide whether it's going to go up or down, and we just manage the money. So we had that 10 o'clock news. Remember, we said it was red for the news. I'm literally about to get off right now because price is literally doing nothing, and I'd rather go to work early and make some more money versus just sitting here. And it's already a low probability day. Remember, you don't want to force trade. That's one thing you do never want to do. You never want to force trades, right? Never, 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 never. Right? You never want to force trades. Right. You never want to force trades. You never want to experience FOMO. You never want to actually just you never want to be in a need to trade, right? That's why you want to keep your job, because if you don't have your job, now trading is your number one source of revenue. Guess how much harder it's going to be for you to trade? Guess how much harder it's going to be? That's why you have to master the skills. You want to just we have so many signs of low probability day today. Why would you trade? Right? Price keep on returning to the midnight open. Price keep returning back to the 830 open. Price is doing a seeking destroy. Right? It did exactly what we were expecting to do when it went lower, but it's supposed to continue to keep going higher. Right? It kept pulling back. So what that means, you sit on your hands. As a trader, our job is to be an observer of price. You want to observe price, right? Analyze price. Right? All we do is manage our money and we decide whether it's going to go up or down. So yeah, I'm done for the day. No trades. Catch y'all tomorrow. Let's get it. So yeah, man, I appreciate y'all for tuning in. I appreciate y'all for tuning in, man. I appreciate if y'all can actually like and subscribe. I appreciate it. If you got some good information. If you got some good information, if you learned something, just like and subscribe or just comment into the chat. I appreciate you. I learned, you know. But besides that, I appreciate y'all for tuning in. And I'm not really gonna sit on here no more because price is literally doing nothing. and it's okay. So I catch y'all on the next one, man. I'll be here probably tomorrow on another low probability day. So looking like this whole week was kind of like a low probability in a sense. Monday, Tuesday. So let me go look at Monday price. I think Monday we had got some decent prices. It's Tuesday. So yeah, Monday we got nice price action. So look at this Monday. We got the sweep. All right, you got the sweep. This day was lovely. You got the sweep. You got the inverse fair value gap right here. Like I was saying, you see how it's holding the upper half? Look at the upper half. Look at the upper half of all the candlesticks. Look at the upper half. Look at the candlesticks. All here, all in the upper half. But look at the wicks. All of the wicks are in the lower half. Look at the wicks. All of the wicks are in the lower half. Change in the state, came down right to this wick, rally up higher. That's what I'm expecting. All right, then you get this, and you get the little breaker here. See how price never came back to that breaker and it just ran. It just ran all the way. Just and you see how it held this fair value. So this fair value gap, like I said, breakaway gap. I'm not expecting it to come back into that zone no more because if we're extremely bullish, you want to see it leave these breakaways, right? This was Monday. Then look at the fair value gap. Yet again, look at the bodies. Yet again, look at the bodies, bro. All of the bodies are in the upper half. Look at the wick upper half. Look at the wicks upper half. Look at the wicks in the lower half. There's no bodies in the lower half. Just like this, there's no bodies in the lower half. There's no bodies in the lower half. Look at this part. Look at this. There's no once it closed outside of the upper half. Look at it. There's no bodies down here no more. Look at this breakaway gap. That's how you know you're aligned with price. TP. Anyways, I appreciate y'all for tuning in, man. I appreciate it. You never know how much I appreciate it, bro. I appreciate y'all for tuning in. I'll be here tomorrow again, 9:15, trading the NASDAQ, man. Let's get it. Talk to y'all tomorrow. Peace. I need me an intro. I need me an intro and how is it? An intro and a extra? I said extra. I need me a little intro. So when it's time for me to get off, I could just click the button. I have my little intro playing. Type shit. But anyways, I'm gone.